they wish.
Hi guys, how are you going? A couple of questions. Who audits the RBA accounts?
Formally, it's the Australian National Audit Office, which does. They are our formal auditor of our accounts. We just tabled our annual report a few weeks ago, and the ANAO is the formal auditor. They employ an external auditor, which is KPMG, to assist them in that audit.
Okay, thank you. And who audits Australia's gold holdings, and how often are those gold holdings? How often is there a stock take of those gold holdings?
So we do that. Our internal audit department does that. We do that. They're at the Bank of England, gold holdings, and we audit that. Our current freak is every 3 years. Every month we get an update of what our I think it's every month, either every month or every quarter. We get an update of what the serial numbers of the bars that we hold. We actually go in and formally audit that every 3 years. Can I confirm to you exactly the frequency? But that's my.
Okay, great. So you've got the serial numbers of all the bars that add up to 80 tonnes worth?
Yeah.
And that's been stock. That you do a stock take of that as well. So you stock take the entire 80 tonnes worth every time you do an audit?
Yes.
Right. Okay.
Yeah. Yes. We go in. So we verify. It's an audit process, so it's not a. There is a sampling element to it, so they don't bring out every single bar.
So do you know the whole 80 tonnes is there?
Pardon?
Do you know that the whole 80 tonnes is there if you're only sampling a part of it?
One of the reasons why we don't move every bar is every time you move a bar, a bit of gold flakes off, and so they don't bring out every bar. But we do, as with every audit, we do a sample approach to that, and that's the same is true of gold as it is of any other asset that we hold.
Okay. Since the RBA has gained independence...
Can I just confirm it is every 3 years, sorry, Senator, that we audit the gold holdings.
Right. Okay. Thank you. Next question. Since the RBA has become independent, you've lowered interest rates to zero. That has inflated house prices in our major capitals to 13 times earnings. It's destroyed retiree incomes. We've got the second highest household debt in the world, and we've allowed foreigners to come in and buy a lot of our infrastructure. Do you think the RBA has done a good job of managing monetary policy since you've become independent?
So, Senator, our objective is to maintain full employment for the Australian population and to ensure a low and stable rate of inflation. That is our stated objectives, in the Reserve Bank Act. And I would say on those prior to the pandemic, which has obviously severely disrupted the economy, I would say that we were close to full employment at the beginning of this year, and we had inflation only marginally away from.
Okay, so inflation, house prices have risen by 7% on average for the last 30 years. Is there any reason why you don't include existing dwellings in the inflation figure? Because if you were to do that, you would never have been able to lower interest rates as low as you have.
So, Senator, we have a number of objectives, which includes full employment. I would put it to you that if we had higher interest rates, we would have had lower employment over that period of time, which is something which directly affects the welfare of the Australian people. So we also don't, the Australian Bureau of Statistics is the one who compiles the Consumer Price Index, not us. We don't compile the index that we target. They don't include that in there. They include a measure of the cost of building a house, but they don't include house prices per se.
Okay, so we've lowered interest rates to 0.25% now. We've run out of petrol in the tank. There's nowhere to go. We can't continue to, lower interest rates, inflate asset prices, keeping our youth out of houses. Okay, so there's another measure that was mentioned in the 1937 Banking Royal Commission that said the central bank, it was a recommendation, should control the volume of credit in the system. Now, had you controlled the volume of credit in the system rather than letting foreign banks come in here and lend trillions of dollars to private investors, we could have built a lot of infrastructure instead of over-investing into housing. I notice you now are going to go to quantitative easing. One of the things you've done is open up a term funding facility of up to $200 billion to buy mortgage bonds from banks. The question I've got, why are you lending to private banks when Section 27 of the 1959 RBA Act says you're meant to be bankered to the government? and Section 26C says, subject to this Act, you shall not carry on business otherwise than as a central bank. So shouldn't you be just lending to the government rather than private banks? And shouldn't the banks themselves be looking after them, their own concerns? Because really that's a form of rent seeking.
We are still the banker for the government. As you're a senator, we do. The government has around about $80 billion on deposit with us at the moment. So we still absolutely are the banker. We have been and continue to be the banker for the government. We provide funding for the banking system to try and achieve those objectives that I was just talking about earlier, which is we're in the middle of a large recession in the country at the moment. We are doing our best to try and support the government in trying to get the economy back to full employment. This mechanism of lowering funding costs, keeping interest rates low across the economy is trying to support lending to businesses and to households. We do that lending to businesses and households goes through the banking sector. That's, they are the providers of credit to business and household. And we are trying to assist that process by lowering the funding costs of the banking system so that they in turn can lower the funding costs to businesses and households, which is indeed happening.
Okay, thank you. I'll just finish with one statement more than a question, really. If I was to end up on a desert island, would I go to a bank or would I go and look to control the means of production? And, you know, the problem with monetary policy is that we've always focused on the markets and we haven't actually used our credit to build enough infrastructure. And we've now got a situation where we've got foreign-owned sovereign wealth funds coming in and buying our infrastructure rather than an Australian-owned sovereign wealth fund building infrastructure. Because if we're going to get out of COVID, we've got to build infrastructure. You can shuffle paper in the financial markets all you want, but that is not going to get us out of COVID. The only thing that is going to get us out of COVID is by building infrastructure and making sure that it's actually Australian owned, and we need to stop foreign sovereign wealth funds and other foreign investors coming in here and preventing Australians from controlling their own means of production. Thank you.